you waiting for?
That was earlier today.
Grab your
on
phone,
CNBC. Just a reminder,
hit
President
record,
Biden has put into
and
place
let your
policies
idea
that
fly.
support the electric vehicle space and
The
call for
future of your
reductions in
startup
carbon
could be
emissions.
just
So
one
that
video
is some
away.
of what the President-elect Donald
Remember,
Trump calls the
be
Biden
clear,
EV mandate.
be
Patrick Sullivan
passionate,
is CEO
and
at
most
EV
importantly,
Realty. He watches
be
this
you.
stuff closely. He's back
We
with us
can't
from
wait to
San
see what you've
Francisco.
got.
A reminder,
Let's
EV
get funded
Realty
now.
has 7,000 EV chargers installed. It's built 70 supercharger hubs. The focus is on powering commercial fleets. Patrick, good to have you back with us. Remind everybody where exactly you play when it comes to the EV ecosystem, and specifically what types of trucks you're hoping are electrified.
Sure. Well, Carol and Tim, it's nice to be back. It's been really quiet on the Western Front for EVs since we spoke in March, so I'm surprised to be here. Tim, I appreciate the flattery. Members of my team have built 70 superchargers. Superchargers are Tesla's product. So I would love to say that I built 70 supercharging hubs, but
You wouldn't be here right now. You'd be out in the field, I'm sure.
But just as a reminder for what EV Realty is focused on, we build large-scale EV charging hubs, principally for commercial fleets. So fleets operating medium and heavy-duty electric trucks. Our approach, and it's really been consistent from the start, is to find places on the grid that have all the power that those large fleets need, to secure the power, to secure those pieces of property, and then to develop them into these logistics hubs.
Who has the fleets?
And principally...
Well, remind us who has the fleets right now, because here in New York, you see a lot of the Amazon Rivian vans. You can see it on the screen right now. Perfect timing. Driving around. Is that a customer of yours?
They are, as are the larger trucks. And so here in California, where my company is based, a lot of the heavier duty trucks that are transitioning first are what's referred to as drayage trucks. So these are trucks picking up a container from one of the many seaborne or rail ports in the state, taking them to warehouses. Our hubs also charge sort of last mile delivery vans and vehicles that are going out to a home or a place of business for delivery.
If people haven't seen these, I just want to jump in. I'm sorry to keep interrupting, but I have so many questions, and I'm not going to get them all because I know Carol has a lot of questions too. Who manufactures some of these trucks? If we haven't seen them out on the road, who makes these?
So you're starting to really see them out on the road. Here in California, there's over 1,500 medium and heavy duty, Class 7 and Class 8 electric trucks operating. Some of the biggest manufacturers for those vehicles are companies like Volvo, Daimler, International, PACCAR. These are the companies that also manufacture the vast majority. I think those four in particular are over 80% the market share for Class 8 trucks. And so these are long-term established companies that are also now delivering EV trucks into the market.
Patrick, I got to say, I've been listening to you. You sound rather subdued. Tell me what your outlook is on the EV world. I think we're all trying to assess what a new administration means. Joe Biden and his administration have certainly put initiatives in place, including capital and spending, infrastructure that is very supportive of the EV world. But how are you looking at a new administration and what that might mean for this space and for you specifically in your company?
Sure. So elections have consequences, both sort of for individuals as well as companies and industries. And I think that certainly the change in the administration is going to affect the conversation around EVs. We're seeing it already. I think the reality, guys, is that we're well past the sort of the tipping point for EVs generally, but really thinking about the larger scale commercial trucks that do the work that move sort of the freight movement. And so my philosophy, certainly sitting here in California, 40% of the seabound freight, containerized freight into the United States comes through the Port of LA and Long Beach. That's almost 20 million TEUs a year. Half of that is consumed here in the state of California. There's a whole lot of focus on sort of cleaning up and making that supply chain more efficient. That doesn't just mean electric trucks. That means more efficient sort of logistics and routing and timing through a port. But there's a whole lot of really important work that is well on its way, certainly here in California and frankly across the country. It's just not politically in vogue to talk about it too much right now.
All right, so still upbeat, just real quickly. You're still okay, positive, at least for the
I
commercial
am,
space.
yeah. Look, do I think that this is certainly gonna have consequences? Absolutely. I think the broader question, and it sounds like you guys have covered this even earlier today in some of the pieces. The implications to ceding leadership in EVs generally for the U.S., that's what's consequential. We currently have the largest EV manufacturing company on the planet here in the U.S. Why stop now? We invented mass production of the vehicle 116 years ago. I think it's pretty telling when the CEO of Ford Motor Company didn't want to give back the EV that he's been driving for the last 6 months, the Chinese EV that he's been driving for the last 6 months, because it was a fundamentally superior product, and they're going to eat our lunch.
Okay. Hey, we're speaking with Patrick Sullivan, CEO at EV Realty. We're also standing by. We're waiting to hear from Manhattan District Attorney Alvin Bragg. He's going to give us an update on the Luigi Mangione case. So we're expecting that in just a few minutes.
And we will take that live as soon as it happens. In the meantime, Patrick, so I do think, it's interesting listening to you. As you said, we've been covering this. We've been thinking about alternative energy, what it means under a new administration, combat change, goals, and so on and so forth. But it does sound like from what you're saying, there's almost a separation in terms of the commercial space, which has already made its commitments and its spending, and it's going to kind of keep going when it comes to probably alt energy and EV vehicles versus maybe what we're seeing on the consumer side of things. Is that fair? Help me out in terms of, kind of from your vantage point.
Well, I think it's both. I think really the consumer side, certainly the impact of losing the EV tax credit will be felt. But again, keep in mind, over 1/4 of all new vehicles sold over the first 3 quarters of the year in California have been EV. It's about 9% nationwide. It's 25% in China. It's approaching 15% in Europe. I think you're going to see that continue, and frankly, those vehicles make sense economically today. On the trucking side, I think what is going to change, and really has been my company's focus from the start, you can't convince a commodity business to switch to EVs if the trucks are way too expensive and all of a sudden moving goods becomes more expensive. And so this transition really has to be economic. It has to make sense for the companies. It has to make sense for the shippers who are paying the freight rates. It can't be done sort of as a subsidy or just because it's green. And that's where I see, there are freight transport companies here in California moving goods that they win on brokerage markets profitably using EV trucks. That's really positive when you think about sort of signs for this industry growing.
How do you make sense, Patrick, of Donald Trump's stance on EVs and what we've heard from members of the incoming administration, given that Elon Musk is so close to him right now?
Well, as you said at the start, if I had built 70 supercharger stations, I probably wouldn't have been in this side of the conversation. So far be it from me to read into that. Look, I think at the end of the day, I think that rational, sort of clear-headed thinkers are going to make smart business decisions, whether it's around light-duty EVs, all of the manufacturing that's been deployed. I think there's over $100 billion of EV battery factories under construction right now in places like Georgia and South Carolina and Indiana and Kansas and Ohio. I suspect those are going to be really important considerations for the administration. And certainly, Mr. Musk is building a couple $2 billion factory here in Sparks, Nevada, to deliver the Tesla Semi, which, if he does move forward with that, will be another category killer. And I have to imagine that's part of his calculus as well.
So, in terms of how you see it, Patrick, his relationship, his having the ear of the president-elect, Elon Musk, that is, of Donald Trump, at least for the moment, appears to be maybe a positive thing for the EV industry overall?
I'd like to think so. I think, obviously, Elon has a number of different and really interesting business interests beyond now just Tesla. But Tesla is what allows all those interests to grow. And certainly with the technology that he's pioneered, like the largest car company in the world, at least for right now, is Tesla. That would seem to be a perch that you'd want to leverage, not waste.
All right, we're going to leave it there. Patrick, thank you so much. Patrick Sullivan, CEO of EV Realty. All right, right now we want to go to downtown Manhattan. Manhattan DA Alvin Bragg holding a press conference today regarding those charges for Luigi Mangione. All right, they are setting up. We do have the DA, Alvin Bragg, there at the podium and getting ready to speak. Let's head there now. And of course, Luigi Mangione, formerly indicted in New York on first-degree murder charges for the fatal shooting of United Health Group executives.
I'm honored and privileged to be joined by Police Commissioner Jessica Tisch. First and foremost, I want to extend my deepest condolences to Mr. Thompson's loved ones and colleagues. His family deserves our respect as they continue to grieve. Our work will never be able to undo the fact that a life was lost. We are here to announce that Luigi Mangione, the defendant, is charged with 1 count of murder in the first degree and 2 counts of murder in the second degree, including 1 count of murder in the second degree as an act of terrorism for the brazen, targeted, and premeditated shooting of Brian Thompson, who, as you know, was the CEO of United Healthcare. This case was made possible by the collaborative efforts of the phenomenal public servants you see before you today, and so many others who are not here. I'm honored to lead the Manhattan District Attorney's Office and privileged to serve alongside Assistant District Attorneys Joel Seidman, Kristen Bailey, and Zachary Kaplan, who were working from the outset, hand in hand, with the greatest police department in the world. The chief of our trial division, Lisa Del Pizzo, and the deputy chief, Chris Prefos, provided sage oversight and direction. And I want to acknowledge our high technology analysis unit. There was a lot to be processed here. Steve Moran, in particular, who heads that, and Marco Popic. We are privileged here at the DA's office to work every day with the phenomenal public servants at the NYPD. It has been a distinct pleasure to work besides Commissioner Tisch, an exemplary partner, and Chief of Detectives Joseph Kinney. Almost every day we're in touch, and his leadership is second to none. And then Deputy Commissioner Rebecca Weiner, who, as I tell her, there are a lot of challenging things happening in the world, and I sleep better at night knowing that she is the Deputy Commissioner in charge of terrorism. The detectives on this, out doing the courageous frontline work, Detective Oscar Diaz, Detective Curcio, exemplary, the finest. It wasn't just those of us here in New York. I want to acknowledge the great work of our partners in Altoona, the Altoona Police Department, the Blair County District Attorney's Office, the governors of New York and Pennsylvania, the FBI, and of course, the brave members of the public who answered the call when our great commissioner put out the call for their assistance. This was a frightening, well-planned, targeted murder that was intended to cause shock and attention and intimidation. It occurred in one of the most bustling parts of our city, threatening the safety of local residents and tourists alike, commuters and business people just starting out on their day. Let me say a bit more about the charges. They include 1 count of murder in the first degree as a killing in furtherance of terrorism, 2 counts of murder in the second degree, 1 charging that the killing was done as an act of terrorism, and the second pertaining to the fact that the killing was intentional. The maximum penalty possible for murder in the first degree and murder in the second degree as an act of terrorism is life without parole. The maximum penalty for murder in the second degree is 25 years to life. There are additional counts as well. A number of criminal possession of weapon charges, 2 counts in the second degree, 4 counts in the third degree, 1 count in the fourth degree, and a count of criminal possession of a forged instrument in the second degree. Let me tell you a bit about the facts. On November 24th, we allege that the defendant arrived in New York City to murder Brian Thompson. After the defendant arrived in New York City on a bus at Port Authority, he checked into the hostel on the Upper West Side using the name Mark Rosario with a fake New Jersey ID. On the morning of December 4th, the defendant left the hostel, just after 5:30 a.m. and traveled to Midtown. For nearly an hour, we allege the defendant waited in the area near the Hilton Hotel, waiting for Mr. Thompson to appear. From 6:38 a.m. to 6:44 a.m., the defendant stood across from the entrance of the hotel on West 54th Street. When he saw Mr. Thompson, he crossed the street and approached him from behind. We allege he then took out a 9mm 3D printed ghost gun, equipped with a 3D printed suppressor, and shot him once in the back and once in the leg. The defendant then fled northeast on 54th Street and took an e-bike uptown before getting into a taxi that took him to West 178th Street and Amsterdam Avenue. On December 9th, the defendant was spotted at McDonald's in Altoona, Pennsylvania. The local police were notified. He was arrested, and he was found with a 9mm handgun, a suppressor, 2 ammunition magazines, and the same fake New Jersey ID he used at the hostel. I want to say a word about ghost guns. These weapons are increasingly proliferating throughout New York City and the entire country. Involving technology will only make this problem worse. Last year, over 80 ghost guns and ghost gun parts were recovered in Manhattan alone. The NYPD and the Manhattan DA's office have been leading in the interdiction of these ghost guns. And one thing I want to make clear, they're unserialized, they can be printed out, but as this case tragically makes clear, they are just as deadly as traditional firearms. This will remain a priority for us here in Manhattan. Finally, I know there have been questions about the extradition process. The latest that I can offer you is that the defendant is currently scheduled to appear in court in Pennsylvania on Thursday morning, first for a preliminary hearing on his Pennsylvania charges. Immediately to follow that will be an extradition hearing. We have indications that the defendant may waive that hearing, in which case he'd be brought to New York forthwith. In any event, we have been preparing on parallel paths, and before the hearing, we'll send to the governor of the state of New York the paperwork that would be necessary if he does not waive during that hearing. I now want to turn over to our great commissioner, and when I do so, I wanted to thank her for her partnership, not only on this matter, but on all we do every day together. Thank you.
Good afternoon, everyone. The unsealing of today's indictment brings us one step closer to securing justice for Brian Thompson and his family, and affirming the primacy of the rule of law in the city of New York. NYPD detectives worked tirelessly to piece this case together. And along the way, the Manhattan DA's office made sure we had every legal tool available to us. Whether quickly providing subpoenas to assist with our evidence collection, or traveling with us to Altoona, Pennsylvania last week after the apprehension, our partnership made this a successful investigation. So I'd like to thank District Attorney Bragg and his team for their work in bringing this case forward. Part of that work included the relentless collection and analysis of surveillance video by our detectives, which ultimately produced a clear image of our suspect. That image was shared far and wide through the media, and thanks to an observant McDonald's customer and the employee who alerted the police, Mr. Mangione was quickly brought into custody. This outcome is why we always emphasize the critical role of the public in our public safety mission. So again, I want to thank everyone who saw something, said something, and did something. That is why we have a suspect in custody today.
Well, it took a bit of a tumble
said,
recently. And that got us thinking, what's going on here? What's causing these shifts?
Yeah, it's pretty interesting, isn't it? It seems like the trigger was a bit of an unexpected slowdown in the U.S. services sector.
Oh, really? So what happened? Fill me in.
Well, the Institute for Supply Management, the ISM, they released their services PMI for November. And, well, it came in lower than everyone was expecting.
Uh-oh, that doesn't sound good.
It dropped to 52.1%. Now, that's still technically indicating growth, but it's a noticeable dip from October's 56%. And even more telling, I think, is that it missed the forecast of 55.5%. So, yeah, economists were definitely caught off guard.
Wow, so this slowdown, It really spooked the markets. Is that what sent the dollar tumbling?
Exactly. The dollar's value is super sensitive to economic data, any sign of weakness, and investors start getting jittery. So this unexpected slowdown, well, it sent ripples through the currency markets.
And as the dollar fell, the pound rose. Is that how it works?
Yeah, pretty much. It's like a seesaw, As one goes down, the other goes up.
So in this case, the GBP USD exchange rate, it went up. By how much?
It climbed by 0.32%.
Interesting. This whole situation just goes to show how much power the Fed really has. They haven't even done anything yet, just hinted at a possible rate cut, and look at the impact.
You're absolutely right. The market hangs on their every word, trying to predict their next move.
So this slowdown in the services sector, it's got everyone buzzing about a rate cut in December.
It definitely has. I mean, several Fed officials have even hinted that a rate cut might be necessary if the economic data weakens further.
A rate cut. For those of us who aren't, financial wizards, can you break down what a rate cut actually means and why is the market so fixated on it?
Sure. So the Fed, right, they're the central bank of the U.S., and they're the ones who set interest rates.
Right.
When they cut rates, it basically makes it cheaper for businesses and individuals to borrow money. It can stimulate economic activity, which is usually a good thing, but it can also sometimes lead to a weaker currency.
Gotcha. So weaker economic data, it makes a rate cut seem more likely, at least in the eyes of the market.
Precisely. They're connecting the dots, looking for any clues about what the Fed might do next.
So do you think the market might be overreacting to just one report? Or could this be a sign of a bigger trend, something more concerning?
That's a great question. This report is significant, there's no doubt about that. But we also have to remember that the Fed considers a whole range of factors when making decisions.
Like what? What else are they looking at?
Well, keep in mind, the jobs report is coming out on Friday, and that's always a big one.
Oh, right. The jobs report. What are we expecting to see there? And how could that influence the Fed's decision? Whether they actually go ahead with this rate cut or not?
Well, the article we're looking at, it mentions some predictions from James Knightley. He's the chief international economist at ING Bank.
Okay.
And they've run the numbers. They think if the jobs report shows around 100,000 net job creation and the unemployment rate goes up to 4.2%, well, then a 25 basis point rate cut on December 18th becomes very likely.
Wow, that's a pretty bold prediction. What makes ING so confident, do you think?
They're basing it on this combination of the weak ISM report and the potential for a soft jobs number. Basically, they see these two data points, if they both come in weak, well, that could be enough to really solidify the case for a rate cut.
So ING is saying if the jobs report is weak, a rate cut is almost guaranteed.
It's definitely a possibility, but we also have to remember that the Fed doesn't operate in a vacuum. They're looking at things like inflation, global economic conditions, even political developments, all sorts of things.
Right. The whole picture.
Yeah, exactly.
So even though this one report has caused some jitters, it's not necessarily a done deal.
Not at all. The Fed is playing a long game, and we'll have to wait and see how all the pieces fall into place.
Okay, so global events, they can really throw a wrench in things, huh?
Absolutely.
Speaking of which, let's zoom out a bit and look at the bigger picture, the dollar's performance over time.
Yeah, good idea.
The article mentioned it was actually doing quite well in October and November. It seemed like nothing could stop its rise. What was driving that strength? Why was the dollar so strong for so long?
Well, from what I gather, it was a string of positive economic data releases. Those reports that come out about jobs, manufacturing, consumer spending, all that.
Right.
And those reports, they're all looking really good. That really boosted investor confidence in the U.S. economy. People started thinking, hey, maybe the U.S. is actually doing all right.
Yeah.
And that led to this belief that the Fed might not need to be as aggressive with rate cuts as some had feared. And that, in turn, well, it pushed up U.S. bond yields.
Hold on. Bond yields. Can you back up a second and explain that for me?
Oh, sure. Sorry. So when you buy a bond, right, you're essentially lending money to the issuer. It could be the government, a corporation, whoever. And in return, they promise to pay you back the principal, the original amount you lent, plus interest. That interest rate, that's what we call the yield.
Okay, I'm with you so far.
So when investors believe the U.S. economy is strong and the Fed isn't going to cut rates anytime soon, well, they're more willing to buy U.S. bonds.
Because they'll get a better return.
Exactly. That increased demand for U.S. bonds, it drives up the prices, which pushes those yields higher.
Gotcha. Higher yield attract more investors, which makes the dollar stronger.
Exactly.
Okay, so that explains why the dollar was so strong for a while. But then this recent PMI report came out, and now the narrative is shifting, right?
Absolutely. This unexpected slowdown, it's injected some uncertainty into the market.
Makes sense. So it sounds like it all boils down to confidence.
Yeah, I'd say so.
When investors are confident in the U.S. economy, the dollar thrives. But any signs of weakness, any hint of trouble on the horizon, and that confidence can evaporate pretty quickly.
That's exactly what we're seeing here. It's a constant interplay of economic data, market psychology, global events, all feeding into each other.
It's like everyone's glued to the news, waiting for the next economic indicator or Fed announcement that could, shake things up again.
Yeah, it can be a wild ride.
But speaking of shakeups, let's bring this back down to earth for a minute. Our listeners are probably wondering, okay, this is all very interesting, but why should I care?
Right.
How does a fluctuating dollar actually impact their everyday lives, their wallets?
That's the crucial question, isn't it? Changes in exchange rates, like this rise in the GBP USD we've been talking about, well, they have a ripple effect across the economy. They impact things like travel costs, international trade, even your investment portfolio.
Okay, now you're speaking my language. So let's say I'm planning a trip to London next month. A weaker dollar means my US dollars won't go as far, right? My vacation just got a bit more expensive.
Yeah, unfortunately. You need to exchange more US dollars to get the same amount of British pounds.
Makes sense.
It can definitely make your trip pricier.
And what about businesses? How does this affect them?
Well, think about a business owner who imports goods from the UK.
Okay.
Those imports become more expensive as the dollar weakens, which can impact their profit margins and potentially lead to higher prices for consumers.
Wow, so it's a double-edged sword.
It is.
Good for some, not so good for others.
Yeah.
And what about investments? How does this all play out in the stock market?
Okay, so imagine you have investments in a UK-based company.
Okay.
If the pound strengthens against the dollar, your investment, when converted back to US dollars, could actually see a boost in value.
Interesting. So a rising GBP USD, it could actually be good news for some investors.
Potentially, yes. But it's important to remember that currency movements are just one piece of the puzzle when it comes to investment performance. There are a lot of other factors at play.
Right. It's never that simple.
And diversification is always key.
Don't put all your eggs in one basket.
Exactly.
This is all starting to make sense now. But I have to admit, it can feel a bit overwhelming trying to keep up with all these moving parts.
I know what you mean. It's a lot to take in.
So what's the main takeaway here?
I think the main takeaway is that these seemingly complex market movements, like a dip in the dollar or a rise in the GBP USD exchange rate, they can have real consequences in our interconnected world.
It's a chain reaction.
Yeah, one event triggers another, and the effects ripple outward, impacting businesses, consumers, investors, everyone.
Exactly.
That's why staying informed about these dynamics is so important. It can help you make more informed decisions, whether you're planning a trip, running a business, or managing your investments.
Right. It's not just about the numbers. It's about understanding the story behind those numbers.
Exactly.
Well, this has been incredibly insightful. Any final thoughts for our listeners before we wrap things up?
Yeah, I just encourage everyone to think about how these global economic trends might impact their own lives. Consider the potential implications for your travel plans, your investments, even your career choices.
Mm-hmm.
The world is more interconnected than ever, and understanding these dynamics can give you a real advantage.
That's fantastic advice. It's a reminder that even though these topics might seem complex at first, they really do have real-world implications for all of us. Thanks for joining us on this deep dive, and keep us brains curious, everyone.
Yeah, global events, they can definitely impact things. Speaking of global events, maybe we should zoom out a bit. Look at the dollar's performance, in the bigger picture.
Yeah, good idea. The article mentioned it was doing pretty well in October and November. It seemed unstoppable. What was driving that strength?
Well, the article points to a bunch of positive economic data releases, reports about jobs, manufacturing, things like that. They were all looking really good. And that boosted investor confidence in the U.S. economy. People started thinking, hey, maybe the U.S. is actually doing all right, which led to this belief that the Fed might not need to cut rates so aggressively, which in turn pushed up U.S. bond yields.
Hold on, bond yields. Could you back up for a second and explain what bond yields are?
Yeah.
And how they connect to the dollar's strength?
Sure. So basically, when you buy a bond, you're lending money to the issuer. It could be the government or a corporation. And they promise to pay you back the principal plus interest. That interest rate is what we call the yield.
Okay.
So when investors think the U.S. economy is strong and the Fed is less likely to cut rates, they're more willing to buy U.S. bonds.
Which drives up demand and pushes yields
Yeah.
higher.
Exactly.
So higher yields attract more investors.
Right.
And that increased demand for U.S. assets, that's what strengthens the dollar.
It's all connected.
But now with this PMI report, the narrative seems to be shifting, right?
Definitely. This slowdown has added some uncertainty to the market.
Making investors a bit hesitant about the dollar.
Exactly.
So it really is all about confidence, isn't it?
Yeah, I think so.
When investors are confident in the U.S. economy, the dollar thrives.
It does.
But any signs of weakness,
Yeah.
any hint of trouble,
It can trigger a shift in sentiment.
wow, so much can change based on, what, just one report.
Sometimes, yeah.
It's incredible.
This whole situation is a great example of how economic data, market psychology, and global events all interact.
It's fascinating.
Mm.
But, I have to admit, a little daunting too.
I know what you mean.
But let's bring this back down to earth for our listeners. How does a fluctuating dollar impact their everyday lives?
That's the most important question, right?
It is.
So changes in exchange rates, like this rise in the GBP USD we've been talking about, well, they can impact a lot of things. Travel costs, international trade, even your investments.
Okay, now you're talking my language.
Yeah.
So let's say I'm planning a trip to London next month. A weaker dollar means my US dollars won't go as far, right?
Unfortunately, yeah, you'd need to exchange more US dollars to get the same amount of British pounds.
So my vacation just got more expensive.
Basically, yeah. But on the flip side, if you were planning a trip to the US, it would be cheaper.
Ah, true, true. And what about businesses?
Let's say you're a business owner who imports goods from the UK.
Okay.
Those imports become more expensive as the dollar weakens,
Oh, right.
which can impact their profit margins and potentially lead to higher prices for consumers.
So it's good for some and bad for others.
It is.
What about investments? How does a fluctuating dollar impact investments?
Imagine you have investments in a UK-based company.
Okay.
If the pound strengthens against the dollar, your investment, when converted back to US dollars, could actually see a boost in value.
So a rising GBP USD could actually be good for some investors.
It could, but it's important to remember that currency movements are just one piece of the puzzle when it comes to investments.
Right, right.
There are many other factors at play.
Don't put all your eggs in one basket.
Exactly.
Diversification is key.
Absolutely.
So the main takeaway here is that seemingly complex market movements, like a dip in the dollar,
Can have real-world consequences.
for everyone.
It's all connected.
It's a lot to think about,
It is.
but it's fascinating, isn't it?
It is.
The world of finance, I mean. It's always changing, always something new to learn.
That's for sure.
Yeah, it really is fascinating. It just shows how interconnected the global economy is, you know? What happens on one side of the world can have ripple effects everywhere else.
Absolutely. And this whole situation with the dollar and this potential Fed rate cut, it really shows how quickly things can change.
Yeah, it does. It seems like navigating these financial waters,
Hmm.
it requires constant awareness, you know? Like you got to be checking the tides and currents all the time. What advice would you give to our listeners who want to, you know, stay ahead of the curve, make sense of all these market movements?
Well, I think the key is to focus on understanding the underlying forces driving these changes, whether it's the ISM report or the Fed's interest rate decisions or investor sentiment. These factors all interact to create this, this dynamic landscape we see in the market.
So it's not just about memorizing numbers, it's about understanding the story behind those numbers.
Exactly. And by staying informed, paying attention to these trends, well, listeners can make more informed decisions, whether they're planning a trip abroad, considering an investment, or even just trying to understand the economic forces shaping the world around them.
That's such an important point, even if you're not a financial expert. Just having a basic understanding of these concepts, it can really empower you to make smarter choices.
Absolutely.
Well said.
Mm-hmm.
This deep dive into currency markets has been so insightful. Thank you. Any final thoughts for our listeners before we wrap up?
I just encourage everyone to think about how these global economic trends might impact their own lives. Consider the potential implications for, your travel plans, your investments, even your career choices. The world is more interconnected than ever, and understanding these dynamics can give you a real advantage.
That's fantastic advice. Thank you. It's a great reminder that even though these topics might seem complex, they really do affect all of us. Thanks for joining us on this deep dive, and keep those brains curious, everyone.
But it's a price-weighted index, not a,
I don't think Tim likes it. Tim doesn't like it.
I don't know. I
Tim's
like
trying to
it.
give the Dow a little bit of love today.
I like it as a stat, but I don't know if I don't know if we should read into it at all.
I mean, on its own, I agreed. I don't know that that's where we want to be reading into it, but I think Alex makes a good point, which is breadth is an issue, and for all the talk that, you know, the rest of the market's catching up, it's not right now.
Okay, thank you, Alex.
Oh, you're quite welcome. I mean, let's take a look at the S&P equal weighted index for a second, if I just bring that up. I mean, as you see the S&P and sort of tech rally off the lows, you're not really seeing that with the S&P equal weighted index. In fact, you're looking at the worst days since October 31st, lowest level since the beginning of November. And there you have the stats, guys. You got the S&P off by 0.4%, the NASDAQ off by 0.3%, Dow Jones, which Tim doesn't like, off by 0.6%. And you got the closing bells on this Tuesday, Fed Eve, guys.
Fed Eve, but you know, this is already pretty much priced in. The S&P 500 down 0.4%, as we mentioned, so no record high. What did we stop at? I know you were keeping track of the number of record highs.
Oh man, I have an Excel spreadsheet at my desk.
59,
I'm
56?
No, I think it was like 57, but don't quote me on that, guys. I gotta check my chart.
You know what? This is the 5th decline in 7 days, so it's been a little bit of a, you know,
it's a wobbly time.
Yeah, I don't want to say rocky, but yes, wobbly is a good way to describe it.
Interesting coming on, right? That BFA survey where it says everybody's kind of piling their cash into equities, which is a sign maybe of a top, kind of a contrarian indicator here. I'm looking at the S&P 500, guys. Most names in the index lower today. Scarlett, we're talking about 378 names in the S&P 500 losing ground, 122 to the upside, 3 at the moment unchanged.
All right, let's take a look at the IMAP. It's a lot of red. In fact, you only have one sector finishing in the green, and that's consumer discretionary, and it's barely in the green, up only 0.3%, and that's on the back of autos, namely Tesla. In terms of the big decliners, industrials, energy, and financials losing the most, with industrials down 0.9%. So there you go, Tim. There's your shout out to the Dow Jones Industrial Average.
Oh, much obliged. Thank you.
It's got to give them something. Tesla's up 93% year to date, and like I think the move just off the election is just so impressive. Let's go to some of the individual gainers, if we may. Pfizer is the #1 gainer in the S&P 500 today, guys. It is up 4.7%, pretty much finishing at its highs of the session. The company coming out, its 2025 guidance midpoint for adjusted EPS exceeding the average analyst estimate. BMO Capital Markets just among the analysts weighing in on this, calling the overall guidance reasonable yet achievable. On semiconductor, also among the gainers on my watch list, at its highs at more than 6%, finishing the day though with a gain of about 2% here. This is after the chip company and global auto components manufacturer Denso said they will strengthen their long-term relationship to support procurement of autonomous driving and driver assistance technology. Denso planning to acquire an undisclosed amount of onsemi shares on the open market as part of the collaboration. So On Semiconductor, the 4th biggest gainer in the NASDAQ 100. And then here, I want to go to Planet Fitness, finishing the day up just shy of 3%. $8.7 billion market cap fitness club company rallying after receiving a street high price target over at Jefferies, which named the gym chain as its top pick for 2025 in the fitness and wellness sector. This one has been on a bit of a tear in 2024, up 40% year to date.
Okay. It's ready for those New Year's resolutions, I guess.
Well, also, it's just really cheap to go. So it's like you can just get it done and get out.
Is this the one that used to give free pizza?
Jim's giving free pizza? That doesn't sound right.
That seems a little weird. Have you guys never been to a Planet Fitness?
I have not.
I don't think so.
Oh, okay. Well, I represent. I mean, it's nothing fancy, no bells and whistles, but like you get the job done. Like it's like, you know, the Walmart of a gym.
Hey, it's all you need, right?
Yeah, I don't need Equinox.
I want to get to some of the decliners on my radar today. I do want to start with NVIDIA, among the most actively traded stocks here today. Finished the day down 1.2%. They actually fell for a 4th day in a row. Shares down more than 12% from those all-time highs back in November. Now trading at its lowest going back to October. Still, though, take it with a grain of salt. NVIDIA up more than 160% so far this year. But over the last month, down 8%, while the stocks has been up 6.1%. And Broadcom's been up more than 40%. And speaking of Broadcom, it is a decliner on my radar today, down 3.9%. It had that massive rally after last week's earnings report. It's kind of like when NVIDIA shares first started to take off back in the early part of 2023. Broadcom shares have soared 38% from Friday through yesterday's close. That was the 2 days that since it reported results. It pushed the company's market cap to close to $1.2 trillion. Today, it did give back some of those gains, I should say. At one point, it was the biggest decline going back to September. Still, though, grain of salt, up 112% since the start of this year.
It's like everyone has decided it's the next NVIDIA.
Maybe.
You know,
But
kind of
look
the
what
way
happened
they thought AMD might have been the next NVIDIA.
or Supermicro.
Yeah.
Right?
But what's so interesting is that Lu Wang just had a piece out about the NASDAQ and the potential sort of rebalancing, and says that whenever you wind up seeing these big guys dominate 48% and add up to 48% of the index, there needs to be a rebalance, and that just happened with Broadcom and its recent rally.
Oh, interesting. Okay, so a couple things happening at the same time. Finally, shares of CVS down more than 5% today. We saw other U.S. healthcare companies, in addition to CVS, fall because PBMs traded lower today. Pfizer CEO Albert Bourla came out and said that President-elect Donald Trump is, quote, very committed to PBM reform.
All right, bonds. Nothing.
That's it?
Snooze
All you
fest. Got nothing for you. There was a 20-year auction that went pretty well. It was pretty solid.
No
But come
one
on,
likes
guys.
20 years.
It's true. No one cared, but it was all right. It was pretty solid. We got nothing. There's nothing happening.
Maybe they're waiting. Maybe they're waiting for a Fed meeting or something
Yeah,
like that.
you know, even if you round it up, you maybe have a 1 basis point move, maybe.
All right, guys. Well, having said that, I think we're all in on content today. A couple of stories on our radar. We all know that great line, nobody puts baby in a corner. We're talking about Dirty Dancing.
We're showing our age, Carol.
Tim, do you know this movie?
Of course I know this movie, yeah.
Alex, you know this movie.
Yeah.
All right. And if you don't know this movie, shame on you, everybody who's listening and watching right
There
now.
you go.
Anyway, the National Film Registry, apparently the Librarian of Congress since 1988, picks a bunch of movies, about 25 every year, and they put it into the National Film Registry. So Dirty Dancing, Beverly Hills Cop, and Up in Smoke among the films being put in for 2024.
I already know that Bluey is going to be put in there.
Oh,
Jumping the gun.
I'm
Are
jumping
you
the
teaming me up for
future
this,
Bluey
Tim?
movie. That's where I'm going.
okay. You're teaming up because
Yeah.
personally, I don't know why this is not the lead story on like
Thank you,
every
Alex. I agree with you.
news station. Because
You're excited about this
if
from the
you
morning.
have a child that's under the age of 15, you know, love, and adore Bluey. So apparently, Walt Disney is working with the studio arm of the BBC to release the first feature film based on Bluey. Apparently, it'll be released in the cinema in 2027. It's according to a statement on Tuesday.
It's a long time from now.
Yeah, and after, well, they got to get it perfect. And after it's run in theaters, the picture will become available in the entertainment's giant flagship Disney Plus streaming service, which also hosts the Bluey TV series. And if you haven't watched it, it is honestly the best kids show ever, and parents love it too. And the whole thing, it's very exciting.
So it features dogs, and I heard it's also good content for dogs.
What?
You mean for dogs at home, like to watch, like if you
Yes.
leave them alone?
Apparently, like the colors seem to help pets want to watch it. I don't know about this. I have not
blues and
confirmed this to
grays
myself.
Kids and pets, who knew?
How often is it on, Tim? How often is it on in your home?
Friday nights, Bluey's allowed. We're pretty strict with screen time, to be honest. But yeah, Friday nights, Bluey's allowed, and when mom or dad is out for the night,
Can I
Bluey's
just say,
allowed.
Devin Leonard wrote an incredible story earlier.
Cover story for
this
Bloomberg
year.
Business Week.
And he said it was the most watched kids show last year, according to Nielsen, the second most streamed show in 2023 after Suits.
Yeah.
Yeah.
A lot of that is parents, I can tell you that.
But
It's a great show.
it's serious, and like they're like really short 20-minute episodes, and to get like
No,
a meaningful
8-minute episodes.
And sorry, 8. I meant
Yeah.
with 2 of them, it winds up being 20. But it have like a meaning, a point, a nice arc
Tim
for
knows
kids and for
everything
parents in
Bluey.
8
I'm
minutes.
just telling you, Alex.
That is brilliant writing. What?
But I think one thing that I'm curious about is how they do this in 2027, because the kids are actually voice acted by kids, and those kids are growing up, so their voices are changing. So how are they going to keep those kids consistent? And
AI.
they're not. That's what also my dad said, Scarlett.
Yeah.
With the family's been talking about this a lot.
You
my
can do
entire
anything with
family.
AI now.
I guess that's true. That's a good point.
But they keep the actual actors behind the kids' voices anonymous.
Super
so we don't
secret.
actually know who it is.
It's really great. For real.
All right. Oh, sorry.
That's a Bluey tag.
Maybe they. Oh. I'm like the Dora and Backyardigans considering
get-
for my daughter. All right, we
we
gotta
gotta
go.
get some
We gotta
Bluey
go.
for you guys.
All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place tomorrow for the closing bell.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. That is Carol Masser. I'm Tim Stenevec, live from the Bloomberg Interactive Brokers studio in New York. Let's talk tariffs, Carol, because President-elect Donald Trump's threats of tariffs on Canadian and Mexican imports might be merely tough talk to the 2 largest U.S. trading partners. For the North American auto industry, and especially American producers, though, import taxes like the kind he's espousing would bring, quote, considerable pain. That's among the conclusions in this new report from Bloomberg Economics' Nicole Gorton-Caratelli, who writes, quote, by threatening Canada and Mexico with tariffs, Trump is threatening to significantly disrupt the U.S. auto sector.
Yeah, this is a big thing. Joseph Thorndike, or might be, depending on exactly what gets done. Joseph Thorndike is director of the Tax History Project at Tax Analysts, which calls itself a nonpartisan, nonprofit publisher of news and commentary about federal, state, and international tax issues, which the organization does under the brand Tax Notes. Joseph joining us on this Tuesday from Falls Church, Virginia. Joseph, good to have you here with us. Walk us through what some of the implications we could see from potential tariffs in the Trump administration. How are you seeing it? What are you hearing from clients? What are their concerns?
I mean, there are a lot of possibilities here, and then probably more unknowns than there are knowns, because Donald Trump is notoriously a little bit loose about the specifics when he talks about things. So it's hard to know exactly what he has in mind. But the kind of tariffs that he's talking about, these across-the-board tariffs, so say 10%, 20%, 25%, the number moves around. These have the likelihood to be really disruptive, and those those sorts of tariffs are unusual. First of all, to have like a flat rate tariff across all products. And it's not at all clear that he would do something like that, even as some of his domestic manufacturing equivalent. But it seems likely that these tariffs, well, they might be a negotiating ploy to extract good deals with other countries. Certainly the deal maker Donald Trump has said that. But I think they should be taken reasonably seriously, because Trump has been talking about them forever, as long as he's actually been in politics. So I think this strikes fear into the hearts of lots of people, including a lot of businesses who stand to see their supply chains disrupted by this.
How do you look at this over at the Tax History Project at Tax Analysts? Do you look at tariffs as a tax?
Absolutely. In fact, for a long time, they were really pretty much the only tax that the United States had. So up until the Civil War, really the only thing going most of the time, except during wars. And even after the Civil War, they're still providing 60% of total revenue up until 1913 or so, because this is the way that the founders of the country thought we would raise most of our revenue. The problem is that doesn't work very well at a couple of moments. It doesn't work very well during wars, which have a tendency to disrupt trade. And it tends to not work all that well politically, in the sense that tariffs are consumption taxes paid by the consumers of products. And that tends to be unpopular at various points. That was true during the Civil War. It was true in 1913. And it's actually how we got the income tax.
I do think about this a lot. And like you say, a blanket tariff on everything. I mean, some would argue, right, that targeted tariffs make sense, whether you're trying to protect a growing industry, whether it's national security issues. Like, there's a lot of things that I guess would make sense. But you do wonder about just throwing it on everything, in an environment where we just brought inflation down a lot over the last year, but there are still concerns of inflation being a little bit sticky here and maybe going up again. I mean, a blanket tariff would change a lot of things.
Absolutely. And, tariffs used to all be targeted. So we've forgotten this, because since the 1930s or so, Congress has more or less abdicated responsibility over tariffs. They've passed a series of laws which have let the president make most of the granular decisions. But before that, it was Congress who was voting on really every single item that was going to be tariffed. The wool tariff would go up, the steel tariff would go down. There were arguments over whether there should be a breakfast table tariff relief, in which, items that people eat at their breakfast table, like sugar, should be reduced. Congress was really engaged in that granular work of deciding which products exactly should pay which sorts of tariffs. That was incredibly dysfunctional, to be completely honest, because Congress did a lot of log rolling, right? Like, one member would say, okay, we'll protect your sugar industry if you'll protect our steel industry.
Right.
And that just made for really high tariffs.
Do you think I don't want to say but I think, do you think that, given the research that you've done at the Tax History Project and Tax Analysts and Tax Notes, do you think Americans understand the implications of tariffs? Like, who pays for them?
I think that that's asking a lot for voters, right? So we all want voters to be perfectly informed about the incidence of taxes, but that's just ridiculous, right? They've never been that. I think it's very easy to pitch tariffs as something that someone else is going to pay. And Donald Trump does that all the time. He says other countries are going to pay these. But in reality, that's just not the way it works almost all the time. Almost all the time, those tariffs get passed along to consumers. Even for domestically produced goods, like let's say that we're putting a tariff on imported cars, domestic producers of cars will say, hey, well, we can raise our prices to equal the tariff price, or maybe just a little bit below. So that's the irony here, is that it raises the prices not just of imported goods, but of domestic goods too.
You know, when we talk about tax policy in general, right, it gets us to do things. You get a tax credit, you buy an EV. You get a tax credit because of your mortgage, a mortgage deduction. Well, you maybe think, okay, buying a home isn't so bad. Like, I do think about that. So, is there a net in terms of tariff policy that you think is actually good for the U.S. economy, good for U.S. growth, versus that which is not?
It seems reasonable that a certain number of tariffs that are sort of targeted and specific are reasonable for certain things, for products or industries that are important to national security, for instance. And that's the way tariffs have been used in the past for the most part. Again, what we're trying to draw a distinction here is between that sort of targeted tariff, which is trying to achieve a specific goal, like protecting a crucial industry, or even protecting jobs in certain industries. And these sort of blanket tariffs on everything that's imported. And again, policymakers have a tough job, actually. We should always remember that they have to weigh against different goals against one another. So you can protect jobs by raising tariffs on industries that face foreign competition, and those industries will be protected. But consumers will then pay more. What's better? What's more important? I mean, that's a political decision and has to be made. But it's at least, I'd say, better to make it on a sort of individual basis rather than a blanket basis saying, like, in all cases, it's better to protect an American industry. That's just not always true, I don't think. Certainly, that's not the way voters have viewed it. And I think that's something to really come back to, is that when we had really high tariffs in like the 19th century, they were deeply unpopular, and they actually produced the modern income tax. We would not have a modern income tax if we hadn't had high tariffs first.
And that modern income tax has come down in many tax brackets over the years. Speaking of that, I'm wondering if you have done any analysis about at the organization about how much would be raised through tariffs versus if the 2017 Tax Cuts and Jobs Act were to be extended.
Well, lots of people have tried to estimate this, how much these tariffs are going to bring in. Again, it's a little hard because the details are pretty sketchy. But there are a lot of credible estimates out there that say that these tariffs are going to bring in, that Trump is talking about, are going to bring in something like $2.8 trillion over 10 years, which sounds like a lot of money. Except that Trump also promises to extend the 2017 tax cuts, and that's going to cost about $4 trillion. So, and compared to the income tax, $2.8 trillion is not a lot, actually. Over that same 10-year period, the income tax is going to raise $34 trillion. So these high tariffs will raise a lot of money, but they're not some magic. They're not going to pay for all the tax cuts. They're not going to pay for new tax cuts like the tax on tips or the SALT exemption or anything like that.
Like you say, devil in the details, and more to be known in terms of what the administration does. Joseph Thorndike, director of the Tax History Project at Tax Analysts. This is Bloomberg.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg, and we begin with a story that you heard live on Bloomberg Radio. Luigi Mangione has been formally indicted in New York on first-degree murder charges for the fatal shooting of United Health Group executive Brian Thompson outside a Midtown Manhattan hotel. Manhattan DA Alvin Bragg said the case was elevated to first-degree murder because Thompson was killed in furtherance of an act of terrorism. Mangione, a former software engineer, faces as long as life in prison without the possibility of parole if he is convicted. Stocks declined today as traders brace for the Federal Reserve's widely anticipated rate decision tomorrow and its forecast for next year. It all comes down 2 o'clock Wall Street time. That's when we get the actual decision. Our coverage begins well before that. And of course, Jay Powell's news conference 2:30 Wall Street time on Bloomberg. S&P 500 index down today by 0.4%, ending the day at 6,050. The Dow had its 9th day of declines, longest losing streak since 1978. The Dow today down 0.6%. NASDAQ down 64, a drop of 0.3%. 10-year yield 4.39%. The 2-year 4.24%. Gold down 0.3%. 26.43 the ounce. And West Texas Intermediate crude down 0.7%. 70.20 for a barrel of WTI. Bitcoin $106,780 on Bitcoin. Recapping, S&P down 23, down 0.4% for our on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Do appreciate that. I don't know if you caught this yesterday. I know Carol did because she was probably watching Bloomberg TV or listening to Bloomberg Radio.
Kind of always am.
Yeah. On Monday, President-elect Donald Trump threatened to fire federal employees who don't come back to the office. He said he would go to court to challenge a Biden administration labor contract that locked in remote work arrangements for thousands of federal employees. Here's what he said.
Yeah.
If people don't come back to work, come back into the office, they're going to be dismissed. This was at a press conference yesterday in Palm Beach.
All right, we are so curious what our next guest has to say about this and more. Laura Gassner-Otting, she has spent more than 2 decades in human resources, helping create AmeriCorps, and has written 2 books, including Limitless, How to Ignore Everybody, Carve Your Own Path, and Live Your Best Life. She joins us from Boston on this Tuesday. Laura, nice to have you here on Bloomberg Business Week. We want to start with that. You know, it's so interesting coming off the pandemic. It was amazing how much work, including all of us, or many of us who did broadcasts from our homes, TV and radio, how much we could get done in terms of work while the global pandemic was happening. There was a real rethink saying, wait a minute, we have flexibility as workers. Well, lo and behold, here we are in 2024, and everybody, including the president-elect, is rethinking this. How do you see the way forward when it comes to being in the office versus working at home?
So I spent 20 years in executive search, and for 15 of those years, I ran my own company, which was a remote company, like back before COVID was remote cool. I'm very pro remote work, and at the same time, I think being in the office is super important. Frankly, we all learned during the pandemic that we could do our work from home, but managers didn't learn how to manage us when we were at home. And so a lot of us have seen stagnation in our careers. We've seen stagnation in our growth, both personal and professional, because we haven't been in the office. The tools that we use to log in from our cubicle are the same tools that we use to log in from our living rooms, but the management tools, they kind of remain the same. And so a lot of bosses, they don't see you working, they don't see you working. And so I think the path forward is going to be, at least in some way, hybrid. There's going to be at least some return to work, and probably more and more returning to work over time.
Do you think well, go ahead, Carol.
But so you're saying it's a manager's problem?
Well, I think if the managers are the ones who are making a decision about your career, then it's all of our problems.
Do you think the federal government employees should have a similar policy as to other employers? I mean, I know that it is a challenge for the federal government to find employees when competing with the private sector. The pay is definitely not as good, and you're working for the government. I mean, there's stability, but there's also frustration that comes with that. Do you think it's a good idea? Like, what do you think?
I do, and it's interesting because I did actually work for the federal government, as you mentioned, having created AmeriCorps, being part of the team early in my career. So I would challenge one of the things that you said, which is that it's not as competitive because the pay isn't as good.
Exactly.
I know from the time that I was in executive search that pay is something that attracts people to their jobs, absolutely. But there are also things like, what's the mission of the organization? Am I inspired by the leader? How broad are the skills I'm going to learn? How deep is the impact I'm going to make? How prestigious will it look on my resume? Where's the job located? What's the commute like? What kinds of benefits will I get? How stable is the job? So there are lots of things that excite and inspire and engage people in the work that they do. And money is one of them. But at any age and at any life stage, it's not the primary one all the time. And in fact, we did an assessment, a survey that we have 10,000 responses from 74 different countries from before, during, and now as we've come out of the pandemic, every possible demographic in every possible industry. And I'll tell you that 36.7% say money is the most important factor that lets them know whether or not they are happy and fulfilled in their job. But that means there's a whole lot of people for whom money's not the most important thing. So it may be that people who are working for the federal government have other things that are more interesting and exciting to them.
All right, let's get to something that we kind of teased, and this is revenge quitting. I'm asking about, what's going on in the labor market. We've got a Fed meeting, Fed decision tomorrow. The number of vacancies per unemployed worker, it's a ratio that the Fed watches closely, was little changed at 1.1, in line with pre-pandemic levels. At its peak in 2022, the ratio was 2 to 1. I mean, we watch things like job openings and the quit rates to kind of get an idea of where we are, who's got the upper edge. Is it companies or is it workers? Right now, how do you see that environment?
We're in a pretty low unemployment rate right now. So it really is the employees market. I saw some studies the other day that said that half of all workers are thinking about looking for a new job in 2025, and at least a third of them are already looking. So they're using this holiday period to network and to have conversations with people, their nearest and dearest, to just talk about what might be next for them. So I think that we're going to see a lot of change in the new year. And the revenge quitting, I mean, some of it comes down to companies saying that their people have to go back to work, and employees thinking, well, I've been just as productive. And so once they start looking around, right, should you quit the job before you have the next job? I would say no, I think that's a bad idea, but there are pros and cons to that, of course. But for those people who are revenge quitting out of emotion, right, out of spite, maybe they didn't get the bonus they wanted, or they didn't get enough of the bonus that they were expecting. Maybe they're being asked to go back to work. Maybe their boss didn't recognize them enough in this past year. They don't feel like they were really seen for what they brought to the organization. Those people are revenge quitting, and as they start to look around, they may realize that the grass isn't as green on the other side, because maybe some of those companies are also asking their employees to come back or having the same issues with some of their toxic culture.
So when you're ticked off and you do revenge quitting, you might want to, slow down and kind of think, right? Like, I mean, you're saying that somebody who does this, maybe you understand why, but nonetheless, they might be doing so and finding that, wait, they might not get a job so quickly on the other side.
Absolutely. I mean, so I think we have to really remember that, if you're going to spend an hour or 2 hours interviewing a candidate, you're probably going to spend 5 to 6 to 7 or 10 referencing them. So who are you going to reference? Who are you going to call? The previous employer. And, if you burn that bridge, you're kind of singe yourself along the way.
I didn't know that that's how long it took to do this.
To what?
Like for, on the HR side, to actually find a candidate, to check references. I mean, that's pretty remarkable. Hey, what about the economy, and to what extent people rage quitting or jumping from job to job depends on the labor market out there? What has your experience told you about how this might not happen if there aren't jobs available?
I think it has more to do with people's optimism and the news that they're following. So, it used to be that we would all get the same economic numbers. And now, depending on what news you're listening to, you're hearing different takes on the economy. So if you're hearing news that says everything's optimistic and the economy is going to grow, you may be more likely to quit because you think there's going to be a ton of opportunities out there. If you're listening to news that's saying we're all in trouble and everything is falling apart, you might want to hold on to your job because you're a little bit more worried about this. So it's really interesting to think about whether it's the economy people are listening to or which version of the economy they're listening to right now.
Hey, I do wonder, Laura, we spend a lot of time every day, certainly today, talking about the new administration, the types of policies that might come down from Donald Trump and his team. And whether it's taxes, tariffs, whether it's electric vehicles, whether it's power, I mean, there's just so many things that could potentially be impacted. So when you think about policies that might be coming, we talk a lot about maybe less regulatory oversight, less regulations and rules for corporations. Does that mean, do you anticipate that in a Trump White House that we're going to see companies and businesses more in charge with the upper hand versus labor and employees?
I absolutely do. And I think we're going to see a lot of growth in certain industries. So certainly construction, I think green jobs, I think energy on either side. I think we're going to see that certainly in food distribution. We're going to see differences in the regulatory environment for food as well. Healthcare is going to change. So every industry that's had regulation that's been weighing down on it, that's cost that it has to deal with, dealing with all the regulation. And if they don't have to deal with that, that's all going to go into building and growing and scaling, and that's going to translate to labor and more jobs.
Well, are you so sure it's the net though is more jobs? I'm just also wondering about automation, right, and AI. That's one of the big discussions we've been having about what kind of replacement that does of actually humans in terms of doing jobs. And I just wonder again if we have a pro-business administration, yes, it can be good for business, right, and that ultimately means jobs, but it can also mean that executives and management are kind of leading the way versus the actual workers. And I just wonder if you see any aspect of that.
Yeah, I mean, I think AI, machine learning, engineering jobs will grow. I think cybersecurity analyst jobs will grow, cloud engineering, robotics engineering. I think that there's going to be a lot of, we need to, automation officers. I think there are going to have to be people that are going to have to put the automation into place. And I think we'll see a lot of growth, obviously, in executives and profit margins and salary payouts. But I think we're going to need to see a lot of growth in the threat detection, penetration testing, managing cloud systems, building, programming, troubleshooting robots. So in order for us to get to this future world of automation, we need a lot of people who are going to be doing the programming and the coding in order to get us there.
So where should we not be spending energy then? If those are the places that are going to grow, what are the areas that'll contract?
Probably the federal government.
Is that a
Doge? See some
Doge?
contraction.
Is that a Doge thing or is that an AI thing?
It's probably more of a Doge thing than an AI thing. I think that's going to be more sort of broad swath cutting of programs, and we're going to see that at the federal level and then also at the state level. So I joked around and said federal government, but all the federal government program funding that then is funding into the state commissions that are running some of those programs, and we'll probably see a lot of health and human services areas being cut, a lot of the sort of the safety net programs that are going to be being cut.
Interesting stuff. Hey, listen, thank you so much. Really appreciate it. Have a great holiday and a Happy New Year. Laura Gassner-Otting, she's a workplace expert joining us from Boston. As we mentioned, spent more than 2 decades in HR, helped create AmeriCorps, written a couple of books, really talking about people thinking about their jobs, maybe looking for a new job, revenge quitting, dun, dun, dun.
She dropped out of law school to join an Arkansas governor's presidential campaign early in her career.
She's done a lot.
Bill Clinton.
Bill Clinton.
Yeah.
Wow.
Found her way to AmeriCorps.
And then helped create that during his administration. Pretty interesting stuff.
Very cool.
Yeah. If you missed any of it, check out our podcast feed. You can get that a little bit later on at Bloomberg.com or at Apple or wherever you get your podcasts. You're listening and watching Bloomberg Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Luigi Mangione has been formally indicted in New York on first-degree murder charges for the fatal shooting of United Health Group executive Brian Thompson outside a Midtown Manhattan hotel earlier this month. Manhattan DA Alvin Bragg said the case was elevated to first-degree murder because Thompson was killed, quote, in furtherance of an act of terrorism. Mangione, a former software engineer, faces as long as life in prison without the possibility of parole if he is convicted. Stocks move lower today for the Dow Jones Industrial Average, 9 declines in a row, longest streak since 1978. The Dow, the S&P, NASDAQ all finished in the red, with the S&P down 23 at 6,050, a drop of 0.4%. The Dow was down 0.6%, another 267 points, now at 43,449 on the Dow. NASDAQ down 0.3%. 10-year 4.39%, the 2-year 4.24%. Spot gold down 0.3%, 26.45 the ounce on the precious metal. West Texas Intermediate crude down 0.6%, and Bitcoin up 0.2%, 106,322 on Bitcoin. Bank of America CEO Brian Moynihan says regulators need to reassess and relax rules they set for banks in what could be the biggest change for an industry under a Trump administration. And in that interview here on Bloomberg Radio, Moynihan also talked about the incoming administration.
Our team's view is they're bringing down to 375-ish type of level, 3 more cuts from where they are today. But they'll be higher in the current context. But if you look back, excluding 2008 till now, the 3.5%, 3% Fed funds rate is the norm, not the exception. It's only been the exception in the last 15 years.
Bank of America CEO Brian Moynihan discussing the Federal Reserve and the outlook for interest rates when the Fed issues its decision tomorrow at 2 o'clock Wall Street time. For on-demand news, 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks, Charlie, for that update. Well, he's got the world's most valuable car maker with Tesla. He's got rockets and satellites with SpaceX. He's got brain implants with Neuralink. He's making the rounds in Washington with the Department of Government Efficiency. He's got something with X. I couldn't really quite put my finger on it when I was writing this.
Seriously?
Yeah, I mean, like, I can't really describe what he has. Is it the internet? It's not the public town square. It's something.
Yeah.
Yeah.
Something.
Okay, now the billionaire, by the way, Bloomberg Billionaires Index, $474 billion. He's got a new Montessori school in Texas called Ad Astra. That's according to documents filed with state authorities and obtained via a Texas Public Information Act request. Bloomberg News senior technology reporter Dana Hull writes all about Ad Astra. She joins us from San Francisco. What is Elon Musk's approach, Dana, to Montessori school? What's his interest there? What's his approach?
Yeah, so Montessori schools, I'm actually a big fan of them personally. My own kid went to one of them. The hallmark is that they really prioritize multi-age classrooms. So instead of, kindergarten and then first grade and then second grade, you're in what's called primary, which is ages 3 to 6, and then elementary school is sort of 6 to 9. And the idea is that kids learn from their peers, and teachers are really there to kind of guide the children rather than teach them directly. The idea is that kids are naturally inquisitive and they can learn a lot if they're just given great materials, and they learn from playing and they learn from each other. So, Montessori schools have been around for a long time. They are all the rage in technology circles. There are, thousands of Montessori schools all around the world. And Musk is now opening a private Montessori preschool in Bastrop, which is kind of an exurb of Austin, where he's got a lot of companies. SpaceX, The Boring Company, X, all have operations there. And we don't know for sure if this is for his own children or for the children of employees. It certainly seems like it is filling a need. Bastrop is a pretty, rural place. A lot of people in the United States struggle to find high quality, affordable childcare, and this school will definitely fill a need.
I just kind of keep thinking, what would Maria Montessori, I don't know. I'd love to see a conversation between she and Elon Musk.
I went to Montessori school too, and all I'm saying is look how I turned out. Okay, not so great, okay?
My daughter went to one too, and I agree. I like the idea.
We're all Montessori parents. That's crazy. Wow.
I know, right? Like that, right? But that whole idea of multi-ages, so like it catches our attention. I guess there's going to be a while, Donna, before we understand maybe why he is doing this. But what did you guys learn? Because you got to see a lot of documents to kind of maybe understand a little bit of what's going on here.
Yeah, so I just sort of, asked the Texas Department of Health and Human Services for all of the emails and the documents filed. And what was super interesting to me was that Musk has partnered with a company called Explore Education to kind of run this Montessori school. Explore is the educational company that also runs the Montessori school that Larry Ellison oversees in Hawaii. So it's not like Musk himself is like in the classroom, but
not yet.
And then not yet. And then I also looked around, and there appears to be another school called Ad Astra under construction in Brownsville, Texas, where SpaceX has a massive facility as well. So I think that this is just the beginning. Elon, when he gets interested in a subject or a project, he tends to go all in. We saw that with his support for President Donald Trump, and I think we're beginning to see that for education. He also has set aside millions of dollars through a foundation that's called literally the Foundation for a K-12 schooling and eventually a university. So this little preschool in Bastrop, which to be clear, it has a permit to open. It does not appear to be open yet. The permit is just for 21 students. I think that is the first of what will likely be a series of educational projects for students ranging from preschool to college.
Is there an idea of his views on, and you mentioned in the story about how many kids we think he has, and how many of those have been in just the past few years alone? Is this like, are his kids going to go to something like this? Do we know?
I would assume so. I don't know that for sure. I think that there are obviously kind of security risks involved. And so I don't know what the plan is, but yes, he has 6 children under the age of 5. And old-time SpaceX employees will recall that SpaceX had a school called Ad Astra 2 way back like a decade, like it opened in 2014. And this was sort of the early days of SpaceX when they were a much smaller company. But at the time, Musk's 5 older children were in need of schooling, and they had gone to like a private school, and Musk met an educator who he really liked and kind of lured this educator to kind of help him create a school. And it was a very small school for Musk's kids and the children of SpaceX employees at SpaceX. Then the pandemic came around. Musk's older children had kind of graduated on to high school. In-person learning became impossible because of the pandemic. So that first kind of iteration of Ad Astra wound down, and now I think we're just sort of seeing it revive. And in Texas, where SpaceX is now really has the bulk of its operations.
Donna, we love turning to you because, you have followed Elon Musk and all of his pursuits for a long time, and certainly have a keen understanding of this individual. I mean, do you have any indication of or any thoughts on why he's doing this? Is this just another interest of his? And, and put that on top of him being kind of the first buddy, right? I
love that she put that in there. First
I love
buddy.
that you put that in.
Yeah.
Refer to it like that.
What kind of inspired me to explore this is, to be clear, a lot of reporters in Texas had reported that Musk was opening this preschool, several months ago, and then when it didn't open, I was like, oh, I wonder what the hang up is. Let's see if I can look at the permit. So I got some records. But when I was looking at Musk's political action committee and his support for Donald Trump, I looked at all the FEC filings to see who the other donors were. One of the big donors was Betsy DeVos, the former education secretary. How Musk and DeVos know each other or got involved with each other, I really don't know. But I think that there is an alignment there. And as we've seen Musk take on this unprecedented role advising Trump, he has said a lot about, academia and the bloat in public education and what he considers the woke mind virus. And now he's got this position with what they call DOGE, the Department of Government Efficiency, that's going to be taking aim at kind of, the federal workforce. I just think that the Department of Education is particularly vulnerable. I think that Musk has also said on the campaign trail over and over again that he thinks that college is overrated, that he has enormous respect for people who work with their hands, that we need more plumbers, electricians, carpenters.
We got to run. Forgive. Incredible story. So glad we got some time with you to hear what you had reported out. Dana Hull, senior technology reporter at Bloomberg News, joining us from San Francisco. Check that story out at Bloomberg.com.
listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
All right, we're getting ready to wrap up on this Tuesday edition of Bloomberg Business Week, but we could not without doing this story because it is now among the most read on the Bloomberg terminal. Honda Motor and Nissan Motor are preparing to start negotiations on a possible merger, which ultimately could be expanded to include Mitsubishi Motors Corporation. This was coming from Japan's Nikkei reporting earlier today. So for more on what's going on, let's get to Bloomberg News. Keith Naughton, he is auto reporter. He's out there in Detroit. This feels super big. Again, it's a report. What do we know? What do you guys know?
Well, it would be big, Carol, because if this were to come together, it would create a car company larger than General Motors. So that would be a big deal. And it would also sort of create kind of two camps in Japan because, you know, Toyota's the big fish, of course, and they have alliances with companies like Subaru. This would put Honda and Nissan together, possibly with Mitsubishi. So it would create a pretty big force, still smaller than the Toyota group, but a pretty big force to reckon with. And each of them need specific help. Nissan's really suffering, profits down, sales down, cutting staff. Honda really can't afford the demands of the future for electric vehicles and other new technologies. So perhaps by combining, they'll be able to navigate this difficult future ahead.
Keith, how much of this is about Tesla and EVs from China?
Oh, it's a huge amount of that, Tim. It's, you know, everyone is quaking over the cheap EVs coming out of China that are, you know, preparing to take over the world. And Honda, for example, was already behind in EVs and had been trying to toggle back and forth between hybrids and EVs. You need billions and billions to pull off something that will compete against the Chinese and compete against Tesla. But even Tesla is having a hard time competing against the Chinese. So yes, that is a big driver here.
Hey, Keith, is it ironic in the sense that everybody was quaking in the 80s and 90s over Japanese automakers coming to the U.S.?
Oh, we've come full circle, haven't we? Yes. And let's not forget there was a little, you know, sort of Korean blip along the way, too. And Hyundai would still be bigger than this group, by the way, if it were to come together. So, yeah, the players have changed, but the nature of this seems very familiar.
I do wonder, too, are we going to see more? If this indeed, and I should point out, I think Honda made it, we will inform our stakeholders of any updates at an appropriate time. Honda put that out in a statement. Honda and Nissan stopping short of confirming the report, but they did put out some statements. But I mean, if this actually happens, Keith, would we expect to see more consolidation in the global auto industry?
I think that has to happen. You know, the capital demands are so huge. You saw GM, you know, just pulling back on its robo-taxi pledge. By the way, it had been working on AVs with Honda, so that partnership also is kind of faltering. And the only ones who can afford to invest in AV robo-taxis these days are big tech companies like Alphabet and Amazon. So, you know, you need really deep pockets right now. So the small fish in the automotive world, to the extent there are that many left, are going to need alliances to get this all done.
What about Toyota? Where does Toyota come into this?
Well, Toyota is looking pretty smart these days. Remember, Toyota didn't go all in on EVs like General Motors and, you know, I don't know, Volkswagen and Ford and everybody else did 4 or 5 years ago. And they were roundly criticized for that, especially by environmental groups. Well, now that's looking like a pretty smart bet when Akio Toyoda said mainstream buyers aren't ready for fully electric vehicles yet. So Toyota has hybridized everything in their lineup, and their hybrids are selling like hotcakes. So Toyota's doing okay. They have tons of dough. They have a very high market capitalization. Toyota's going to be just fine.
So is everybody increasingly in the global auto industry just looking at what China's doing in particular because of the EVs that they are putting out? Is that where everybody's kind of like, well, wait a minute. Okay, we've got to kind of watch what's going on there.
Yeah, well, so, you know, Carol, China has, I believe it's 50 million vehicles of capacity for a market that purchases 25 million. So that's what everybody's afraid of. And they have this very, very low cost base, whether it's for electric vehicles or just regular internal combustion engine vehicles. So there is this fear there's going to be this tidal wave of cheap Chinese product just overwhelming the globe. That's why there's so much protectionism talk here in the United States by both Republicans and Democrats. Everyone is trying to keep China at bay, but there's only so long you can do that.
Yeah, we've spent a big, I feel like, bulk of our 3 hours here on air, Keith, talking about tariffs in particular and addressing the EV space. So I don't know. So what's next? What do we watch out for? I guess confirmation that this is actually happening?
Yeah, the statement you were talking about earlier, I would characterize as non-denial denials.
Well said.
And so it certainly feels like they're heading for this. Nikkei, who reported it first, seems to, they don't even cite people familiar. They seem to, it's like the word of God. I think this is being leaked by these